The Federal Reserve raising interest rates again today by 3/4 of a point with the goal of slowing down inflation.
And it is the highest rate hike in decades. Our D.C. Bureau Chief Ben Kennedy live now in Washington with the details for us. Ben.
Calvin, Nicole, the big question is, what does this mean? Well, if you want to buy a house or a car, odds are you'll now have to pay more. And the Fed did this to try and cool down the economy.
75 basis points.
The Federal Reserve took historic action Wednesday by raising key interest rates 0.75%.
We thought that strong action was warranted at this meeting, and today we delivered that.
Delivered to counter inflation amid surging consumer prices. It's the largest increase in 3 decades and means higher borrowing costs for car loans, home mortgages, and anyone with a credit card balance. The Fed hopes this move will stamp out rising prices from food to fuel as the average gallon of gas hit more than $5 a gallon.
The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food, and is creating additional upward pressure on inflation.
The Fed's effort to slow the economy comes 1 month after the agency boosted rates by 0.5 point, as the central bank tries to gain control of inflation without sending the U.S. into a recession.
Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common.
And some economists do believe, despite this move by the Fed, a recession is inevitable. Live in Washington, D.C., Ben Kennedy, Local 10 News.